All right. Well, ladies and gentlemen, welcome to another edition of the Thursday Trading Studio with myself, Steve Gomez. I want to thank everybody for taking the time out of your day to come hear what we have to say today. Before we get started, got to do the lawyer speak. Just want to make sure that everybody here is aware of the fact that we are not financial registered investment advisors. So everything that we share with you here today, strictly for educational purposes, so please do not misconstrue what we say today as a solicitation to buy or sell anything. All right, so I'm sure as all of you are aware, a pretty active day in the market. We've got earnings upon us, so the volatility is picking up, and as we can see from what we'll show in just a moment from the chart on the SPY, pretty interesting little day. But we've got some good things on tap for you. We're going to keep to the same curriculum, but boy, we've got some cool things to show everybody today. So let us begin. Now, Steve, we want to talk about the markets first here, and then move into our other charts that we've prepared.
Sure. It's always a good idea to look at the SPY on a daily chart and see where we're coming, where we've come from, where we could be going. For those of you that may have been watching the futures markets last night, the Bank of Japan was throwing a bit of a curveball. But I don't like to get too fundamental. I'm a technician and I love the stats and I love Holly, but sometimes we got to kind of know what the bigger picture is out there. And I'm going to try to explain maybe what happened today in the spiders. But what you're seeing in the 5-minute there is what the markets looked like overnight in the Nikkei, and even in our spiders last night. We took a pretty good dip and then we bought back and had a minor gap down and bought the gap back up. But towards the end of the day, something spooked the market. Don't know what, but there was a rush of selling. It could just be technical. It could just be the beginnings of what we talk about, building a base camp and pulling back and going sideways and grinding it out and, you know, excuse me, just trying to continue to build on that higher low for lack of a better term. There is a gap down there as well, which could be also a magnet maybe tomorrow because we're pretty close there. But those lines that Jamie drew on Monday, I believe, are still intact. We're now at the low end of that line, and we could be threatening to break it with today's selling. I wouldn't be surprised to see some follow through. Doesn't really matter what the story is. It very well just could quite be that it's technically time to take a breather. You can see that little wick that tagged that upper line. For whatever reason, we didn't have any good follow through in the last few days. Some big player out there decided that maybe it's time to start lightening up, and all it takes is one or two, and that's it. But I try not to dwell too much on the whats and the whys as to more looking at these charts like a trapper would, following footprints in the sand, trying to figure out what the herd is thinking, and the herd's definitely backing away from those highs, and then that high of yesterday we really sold off of today. So this could be the beginnings of some grinding action in this range that Jamie has so easily identified there.
Right, Steve, and this also looks very similar to the same daily setups that we identify from the trend change windows that we watch.
Right.
So, who knows? We'll get into further detail about preconceived notions here in a little bit.
Yeah, we don't want to get too far down the road, but maybe that's the beginning of a cup, and maybe we're beginning to work on a handle and attack that higher level sometime down the road. We'll see, but yeah, for now we got stopped there, and I anticipate some more grinding.
Absolutely, and regardless of what happens tomorrow, whether we bounce or whether we go down, one thing is certain: there's going to be plenty of opportunity. Alrighty. So, how about we talk about our other chart now?
Okay, which other chart would that be?
Since we're on the topic of charts, right? So got it right here.
Wow. Yeah, this brings up a few points. One, Dan went over it yesterday, and I went over it last night again. That green line all the way back in the bottom corner, that's 2002, and that's when Trade Ideas was born, and just finding its sea legs and getting the word out. And then that middle section is a long exercise in working with the enterprise space with the Ameritrades, Scott Trades, E-Trades. and having to deal with a lot of the politics that go on behind the scenes there. And then you'll see that third portion is the realization that there's a great product that we have, and let's bring it to the retail market. And then Holly comes out towards near the end of that, and then January is where the angle just launches. And what we call this on a stock chart is getting ready to go parabolic. So great news all around. I mean, there's just we're so excited to see this kind of growth because the word is definitely getting out. You guys are a part of this, and that's why you show up and learn more about this great product. But this is what we call parabolic growth, and it's just a wonderful, great thing to see. And it also does open the door to some more pricing opportunities and deadlines and some changes in the mix, which will be discussed more by Scott in detail. But I will give a tease for those that are wanting to try Holly on a monthly basis rather than go for the full enchilada and grab the year lifetime. There's going to be a new way for you to sample that, and I think that's a wonderful way for some people who are looking for something along those lines to try and get their feet wet rather than take the whole plunge. But there's nothing wrong with taking the plunge here. These subscriber numbers certainly speak for themselves.
Yes, Steve, and the reason we're wanting to take the time to show you guys this, other than the fact that it's a chart, and we all like charts, too bad I can't draw a line across here and identify the breakout, right? But the reason we're showing you guys this chart is because, what we're building here at Trade Ideas since 2002, isn't just a thing. It's a community that's centered around the technology that we're bringing to the market. And when you start off on a task like this or a project like this, there's a lot of unknown factors. Well, one thing that we learned is if we're depending on corporations for our growth, we're taking our own destiny out of our own hands, right? So what we've been doing behind the scenes over the past 3, 4, 5 years is completely retooling our priorities and continuing to improve the technology while at the same time focusing on the user, because without you guys there is no Trade Ideas and vice versa. So what we're doing now is we're focusing on things that we know everybody needs, but try telling that to a corporation, right? So we're taking it into our own hands, and this is the result of it. And the reason that this subscriber base is going inverted now, and soon will probably be pure parabolic, is because what we're doing is resonating with you guys and every other user that's out there using our product. Holly and our new technology is the reason for this. So for those of you who are participating already, big thanks, big gratitude. And for those of you who are not participating yet, going back to what Steve said, as we get the technology more and more advanced and get it more and more dialed in, then it's destiny that prices are going to go up a little bit. So we'll get into a little bit more detail on that towards the end of the program, and probably let Scott kind of allude to what's going to happen in the future.
Yeah, and again, also the access on a monthly trial basis will give you the access to what is our favorite tool of all, aside from Holly, of course, in a different league, but is the new price alerts. There's so much that can be gained and used and learned and gleaned from the price alerts, as well as the whole collaboration function. And one more thing on this chart, one of the reasons we're seeing this parabolic growth is there's really no place else to go. We've got the market share. There's nobody else doing what we're doing with the technology and the way we're doing it. This technology is 14 years old now, and it's stacked on top of each other like a building block. We couldn't have gotten to Holly without the prior 10 years of building blocks of technology underneath it. So the barriers to entry are significant here, and to our knowledge, we're the only ones that are doing this. Yeah, there might be some crazy hedge funds and private equity that are doing some stuff behind big walls that we don't know, but as far as opening up to the retail, there's nobody else out there doing this.
That is absolutely true. Okay, before we cruise on into the nitty-gritty, and there's so many good trades today, it was almost like we had 2 trading days in one when we look at the action from Holly. So we just kind of wanted to show you guys this as well. We always like to show the overall performance that Holly's been turning in, but how's your April trading? Because this is how Holly is doing in April. So nice little gap here between the markets, and like they say, a picture speaks 1,000 words. So far so good, and hopefully things are just going to continue to improve.
Yeah.
All right, well, let's pop on over to the fun stuff now. Let me just shrink these charts back down a little bit. And let's just go ahead and jump right into Holly because, you know, of course, earnings are upon us. Volatility is starting to, you know, show itself, which is great because more opportunity, more volatility, they go hand in hand. Let's just pull another SPY chart up on the, talking about preconceived notions, you know. When's the last time we saw this at a close? You know, ironically enough, I was talking to another friend of mine yesterday who's in the trading biz, and I was like, you know, we should start trying to develop some strategies because, you know, for the last hour, because when's the last time you saw the market tank at the close? Well, answered my question within 24 hours, today, right? So once again, that's a good example of even me having a preconceived notion. Well, the market never tanks at the close. When's the last time we saw the market tank at the close? And voila, when you least expect it, that's when things will sneak up and bite you. So if you did have any preconceived notions, as we were coming back down to this level, you're like, oh, well, the market never goes down at the close and just keeps going down. Well, today it did. You know, what's it going to do tomorrow? We do not know, but we're going to have to rely on our statistical probability to show us the way. All right, so here is the hopper that Holly had prepared for today. And
you know what stands out to me right off the bat is that P&L graph on the left. It's almost like you had 2 full days in one, isn't it? You got 2 for 1 today.
Absolutely, because, you know, as soon as I heard Holly start spitting out her symbols, you know, I've got the old speech, text-to-speech working. So, you know, I had her minimized. I always keep her minimized until I hear the first one come out, and then I pull up and start watching. And boy, it was just kind of off to the races because, you know, as we talk about all the time, a lot of the times when Holly has a really good day, what we've noticed is as she piles into her positions, there'll be a little bit of a drawdown while the positions start to catch, and then we start to see it slowly cycle up. But today, it was just green, 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 green. Before you know it, we're in, I think it was about 12 positions, approaching $3. So, you know, everybody was just like, this is great. Steve and I took some trades. You know, matter of fact, for those of you who attended the Trade of the Week, look who made an appearance from a Holly trade today, CWEI. Counter Monet.
Not only is Holly delivering it up, but that one was already delivered up in your emails on Monday and still an active trade. So I was real happy to see Holly take that as well. I was also happy to see Holly take some other energy type names that were going off the hook today. And it's always fun to see when the AI is kind of picking up on a theme. There were 2 themes today. There were some energies and there were some shippers. And we will get to the shippers. But I do want to highlight one thing as well. Well, let's see. Since we're on the CWEI here, it just went right up to that level of interest, and you can see it expended most of its energy getting there. And then once it got there, it's like, well, now what? I'm all out of breath. And so it created a really nice handle in that little cup and handle situation. I fully expect it to regroup, and over the next few days, hopefully, if the market permits, go back to highs. But if the market rolls over, all bets are off. And it's been a kind of a consistent market that, like Jamie says, is being bought back in the afternoon at 3:30. If this market gaps down, hey, don't worry, just buy it back, which is great when it works. But eventually, that's going to stop working. That is not going to work forever. So we got to be prepared for any change in the winds. So the other thing I wanted to say, if you can go back to the P&L. What happened midday that gave us that big camel hump? Well, I can tell you what happened, and I want to correlate it to how we use Holly. Holly is not a black box. Just because she spits out 4 symbols in auto, speech to text doesn't mean you pull up your account and buy. No, you've got to look at these things first and find out what's going on. There may be something she's missing, and in this case, there was. So let's look at our biggest loser of the day. What was it? If we go to our sorted field there, we got this SYNA. And as soon as I saw this, I typed to Jamie, I said, uh-oh, this one is going to hurt. What do I not like about this? Well, that giant wick had come out, which means there's some sort of intraday news, some sort of anomaly, and the algos are pulling away, then coming back in, and these are the kind of crazy volatile things you really want to stay away. There's nothing clean about this chart. So unfortunately, Holly took a hickey for us, but when we pulled this chart up, we're like, not touching this one. Look at that thing. I don't even know what the news is.
That's a 7-point range,
yeah,
just in the 5-minute candle there, from the top to the bottom here.
So ultimately, she's the idea generator, but you're the curator. You are the gatekeeper as to who and when and why you want to pull the trigger. There's absolutely no reason to have followed a trade like this, because something was obviously missed with that volatility spike. And the volatility doesn't just go away. It's like plucking a guitar string. It's going to come back, and it's going the other way and the other way, and slowly it's going to settle back down. But until it settles back down, you're just going to get whipsawed back and forth. So there was a $1.50 hickey that we had to take off the top right there. But the genius of the AI is it doesn't have emotions. It doesn't sit back and just go, God dang it, I just gave away my morning. It really pisses me off, and now I'm in a bad mood, and I'm going to take myself out of my zen. But no, Holly doesn't have emotions. She just fought right back, kept playing her deal, kept doing her thing. And to top it off, at the end of the day when the market was rolling over, she actually threw a short in there. So it's a constant trial of what is working statistically. Maybe it'd be a good time to, do we want to show those other slides, or are we going to save that for
Yeah, absolutely. I was just noticing that someone, commented in the question and answer panel that all of that action actually happened in this 1-minute candle here. So I just wanted to kind of show that.
Oh yeah. Well, there's the algos for you. Their that's 10 minutes in their world.
300,000 shares in that one skinny little, candle. But yes, that is a product of an algorithm for sure.
Yeah.
All right. So as Steve was, alluding to, preconceived notions, right? Very bad for an individual, because as Steve likes to say all the time, we look at the footprints in the sand or the footprints in the data, right? And that's what we make our decisions on. So preconceived notions, nobody is immune from them. Case in point. Steve, take it away.
Oh, well, Dan brought this to my attention, and I think it's funny. We're kind of ribbing them, but here is here's a fundamentalist. I don't think Mr. Wonderful really fully understands how to read a chart and knows how to consider a chart footprints in the sand. So he's just going off what he thinks and what the fundamentals are, and he's not probably seeing a whole lot of margin compression and when is this company going to really turn a profit, and he's probably asking all those questions that the old school guard does, but he's missing the big point, and he goes on and makes a big bold call. If it's in your portfolio, get it out. I don't know what he's basing that on other than his own opinion, and opinions, everybody has them, and there's an old axiom, I won't complete that, but everybody's got opinions and they all stink, usually.
And we can see back here the price. Of course, maybe he just likes to get out of stocks at $600.
Well, true.
It's pretty random. However, oops. However, do you think the guy's too happy right now?
No.
Okay, once again, here's where he's telling everybody that it's terrible at 618 just recently, and now Amazon is trading up at close to 680. So, talk about a preconceived notion that I wouldn't want to be that guy right now. Let's just say that.
Yep.
Okay. So.
Like I was saying earlier, I was thinking, Holly reminding us that after a big sting in the middle of the day, that she just keeps on going, just keeps going where the numbers are, going where the probability is. We call it like counting cards. In all sense, the AI should be considered like a casino, because the casino has the edge, and we can see based on the charts so far this year of the performance, Holly's got an edge. And the trades that are fired off, they all have an edge. And so in the long run, not every trade is going to be perfect, but in the long run, the casino has the edge, and the edge is going to win out. And that's the way.
So the market is the casino, correct?
The market is the casino, and Holly has the edge, and she's
Holly
not going to get kicked out. Not going to get kicked out for counting cards. So, you can either try and follow the probabilities and the edge and the statistics, or you can be like, Mr. Wonderful and have your own opinions. But, at the end of the day, we made kind of a funny slide there showing the difference between the two. You know, you need to consider Holly like you're sitting next to a card counter in Vegas. You know, just watch and learn. You're going to learn and watch, and you're going to start to pick up things, and you're going to notice things, but you're in the presence of greatness. It's very similar to a golfer. For any of you that golf, and you can understand this, Jamie, you're going to laugh at this. But,
Oh yeah, oh yeah.
you get somebody in your group who's just a complete hack duff, and you start falling off your game a little bit. But on the contrary, when you're playing with somebody in your foursome that is a scratch golfer and they are just dialed in, there's something about that presence and being in your group and being next to you that elevates you and brings you, and you start to pick up on things and emulate. And so that's the way we look at Holly, you know, sitting next to this trader, you know, statistically perfectly trader. Yeah, there's going to be losing days. Yeah, there's going to be losing trades. But in the end, the one with the edge is going to win.
You're right, and that brings up a very interesting correlation. You know, if I please allow me to hop back into the Wayback Machine and go back in time to about 20 years ago when I first met Dan at Block Trading in Austin, Texas. I came in about 2 weeks after he did, so we kind of learned via bloody noses how not to trade. But, you know, after about 6 months in the chair, we're still struggling, and, you know, you'll do it back then when you're in an office environment. You know, I had Dan sitting to my right. I had another guy named John, whose last name shall remain nameless. But John was always getting into these stocks short, and it was like clockwork. At least once a day, he'd start bitching and moaning. Like, well, what's going on? He's like, well, I'm shorting, you know, Amazon here, or that was too early for really to trade a whole lot of Amazon, but maybe it was U.S. Robotics or Intel warrants or something like that, and he would be short. And for those of you who have never seen an old school level 2, back then, it was just all market makers. There were no ECNs. Island wasn't even on the scene, so you could see, hey, there's Goldman Sachs, Smith Barney, Herzog, and so it was kind of, you know, wait for the last bid, knock him out, bid becomes the offer, you're flat, you try to make more money. So this guy was shorting a stock, but the guy on the bid wouldn't leave. He would just stand there with 100 shares and keep refreshing for 1,000. So what do? As soon as I see 1 or 2 offers start to get hit and it looks like that thing's about to reverse, I'll take all those offers out. And I know that this guy over here still hasn't even covered his position yet. So I capitalized on his pain. Now, that's trading, right? Anything, I will push any button to try to get that trade done, even if it's capitalizing off somebody else, right? Now things are different. We all trade from our home. There's nobody sitting next to you to capitalize on. Well, not true anymore, because Holly is always there. So not only does she produce winning trades that you can participate in, but as we like to take a look at from time to time here, the non-exit column. And just to refresh everyone's memory, you know, we have to have Holly back in cash at the end of every day so that we can compare her results. But, you know, this little guy right here, let's see, looking at the wrong non-exit. Let's just stack that up there. Okay, so number 1, look at the beauty here. This does not happen very often, but today, 2 different strategies.
She birthed twins. She had twins.
So Mighty Mouse said buy DRYS 292 at 709, and then about not even an hour later, another hit at 305. Now, if you're a human being, right, and let's look at, yeah, this one is the first one. Okay, so here's the first entry. Maybe you participated, maybe you didn't, but later on, it says buy it again here. Play it again, Sam. And most people, you know, don't think that a little $3 stock is going to put in that big of a move. But guess what? Today it did, and you were in it. Not only once, but you were told about it 2 times by Holly. Probably one of the biggest, you know, from a basis point standpoint in the market today. You know, 30-something% roughly, right?
Which begs the question, why do we not have the percent column in there? And that's our oversight, guys. Trust me, it's coming real soon.
Right,
today would have been the day to just go, oh my God, I get it. Geez, 35% in dry ships? That's pretty impressive. The other thing is on that first trade, Holly had to get out. You'll notice it was a time stop on the first one, but it went on, obviously went higher. Now, whenever I see time stop, and Holly's in a really good looking trade that's all over social media and everybody's talking about, and it's blasting off, and it's at highs, probably not the best idea to maybe follow her, because she has to get out for a time stop. But us with the trader, and again, it's not a black box, it's a gray box, she has generated the idea and we're responsible for managing it. So more than likely, people that took that trade out there today, I'd be surprised if they didn't hang on for a little bit more than that 40 cent close position on the first trade, because at that time of day, Holly was basically closing it down at the highs of the day. There was certainly more meat on the bone, one would think, in that moment.
True, so that's one aspect of the non-exit profit. But let's talk about the other aspect about when Holly gets into a trade and let's say she gets stopped out. So nothing really stands out too much on these stop losses other than the fact that the stop losses seem to be saving us a lot of money. Let's see, 20 cents here would have ended up being a loser. Same here. So a lot of the times, though, let's pick one that got stopped out. Let's see, exit reason, time stop, stop
Big
it.
Sina, that big
It's
Sina.
the Cena, it's the albatross around our neck today, but it really didn't even do that much damage. Things like this, could have easily went the other way, probably just due to the heightened earnings season, whatever the news was. I haven't even bothered to go back and look to see what happened yet. We've been so busy. But in any case, so let's say that's the CWEI again. But in any case, on a stop out, a lot of the times, Holly will get into a trade and boom, 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 in 5 or 10 minutes, she takes a 35, 40-cent loss. Stop loss gets hit. But then you might pull the chart up and go, okay, well, and I'm just pulling this out of thin air just as an example. Let's say Holly called a long right here, and then we got stopped out. Well, then you see it bottom out, then you see it start to perform this little, slow consolidation here. So you're like, well, I know the trade coming out of Holly's strategy was very statistically inclined to go my way, but this looks like the timing was off, so she got plugged out, okay? So then it's just like that guy that I used to sit next to. Well, I saw her lose money in it, and now the thing's starting to tighten back up. So, if it takes a little pop above this this line here and breaks out, I'm going to take another stab at it. So, what you can't see here is the hidden opportunity that you always have in a trade around. And all you have to do is look at it, because, see, this is why it's so the perfect case of symbiosis. It's a symbiotic relationship, because Holly does the heavy lifting and the statistical analysis, but she can't read charts. That's what you do. So, you see it's a team effort here between you and Holly on a daily basis. And she's always going to be there. She's never going to be hungover. She's never going to miss a session. She's always going to be there, right? So the more time you spend in front of Holly, the quicker you're going to learn. It's like I always say when I'm talking to beginning traders. If the factory is going to make widgets, it has to have raw material. Otherwise, no widgets can be produced. Now, what does that mean to us? Well, your brain is a factory, and it produces ideas, but it has to have raw material. And experience and familiarity with the product and how Holly trades, and take it one step further, alerts and top list and ideas. The more time you spend around the product, you're manufacturing the raw material that you need so that you can grow as a trader and have new ideas and constantly push the envelope. So Steve, let's talk about what you like to affectionately call the holy trinity of trade ideas.
Yeah, you mentioned it earlier. It's the footprints in the sand. It's the data coming either from Holly or from our top list sectors or alerts, and it's our price alerts, setting our alerts to come to us in real time. Right. And we talk a lot about trying to keep everything as simple as possible. And simplicity certainly makes things a lot more easy, and the more simple we can make it, the better. So what we normally do on our homework is we just simply bring up the data that we're going to pull from. In this case, this trend change lubricant has been working really well. We get our charts, and then we get our, our price alert set, and that's it. With just these three little tools in a quiet environment can bring forth some really good trading opportunities in real time the next time the markets are open. And this has been working really, really well, and we just do it the most we can to try and keep people from being a deer in the headlights in the market and showing them a way. It looks like a big giant Christmas tree there. What do we make sense of all that stuff? Well, chance favors the prepared mind. Let's just go in and do some homework and create some opportunities. Is that where we want to go next?
CWEI is the epitome. It's the classic example. Talking about it for days, days, and days, and today, everybody that was with us yesterday and the day before and has been listening to it capitalized on this. So you're seeing the finished product right here, but as opposed to Steve and I just programming a bunch of limit alerts today and handing them out like normal, we kind of wanted to show you, the process by which those picks are selected. So pretty simple process here. Once we get our trend change up, or a different variation of it, because we can massage these factors. It's by default, just to give everybody a peek. It's a pretty simple filter combination, as most good things are, beauty and simplicity. And this one's focusing on the stocks that are at the upper end of their 20-day range, but not any higher than 35th percentile of the year, so we get that semi-beat-down look on a stock that's thinking about changing directions. So we can always put new twists on these things by looking at maybe the 10-day or even get a little bit smaller, but we'll just leave it on here for now. So basically, this is how we do it. We already know what dry ships did today. I mean, this is just a really classic example once again of the trend change type of play that we're looking for. Obviously yesterday was when it poked its head above, and if you're using this area right here, and then today, wow, once again, preconceived notion. I think a lot of people thought that this one was going to get some legs today. But boy, it was turbocharged. So kudos, and then Holly was in it. So you see, folks, when you find something like this, just like CWEI, we've been harping on it all week. Steve brought it up as the trade of the week. And then to see Holly get in it on an intraday basis too, I mean, that is such a beautiful thing. It's poetry in motion, and then, for those of you who might watch turbo breaks too, a lot of these stocks, Holly, they were our daily setup. Then they showed up in Holly. And then they show up on the high volume tickers like turbo breaks up and down. I mean, when you see that going on, I mean, it's kind of hard just to not sit here and smile at your monitors, right? And when things are firing on all cylinders like that, it's truly a great thing, and that's what happened today. So let's just keep on looking at these charts and see. Everybody just needs to kind of get in the habit of not spending too much time on these things, because it's a little hard to see what we have here, so we have to stretch it out a little bit. But basically, it's just a methodical process, coming through here and setting up our lines and setting our price limit alerts like so. Let's see, where did my little screen go? There we go. So the high of that bar is $1.51. So, looking very similar. It might poke its head up tomorrow. It might not. Since this one had such a little grind up here and a big bar today, I mean, Steve, you agree with me, probably more geared towards a pullback alert, or maybe even do a little bit of bracketing here. So 151 here. So we'll just say 151. If it rises to daily setup. But then, of course, thinking about what typically happens, especially since we're in earnings, we all know that the first 30 minutes can be quite wacky with the algo hunting stops and all that good stuff. So, just kind of eyeballing this chart, maybe set up another price alert right at the top of these wicks here, 130-ish or so.
Yeah, let's take a look and see what it looks like.
If it falls.
No, because you're at 128 right now. You're going to go back up, right? Is that what you're saying?
What do we close at today? Right here. Right, so probably a little bit further down here. So all we got to do is move that guy down.
That's where I was looking exactly.
Yeah,
right.
yeah.
Thank you. That's much more of a pivot point. You know, it's kind of a prior high back there on that other close, and it's you know, trying to break the lows of a couple most recent candles is usually what the algos are hunting for.
Absolutely, and everybody just take notice. If I right-click and go to Properties, Crosshairs is not on. Anytime you're in that mode, you can just grab this little guy and adjust your price without going back and fumbling around with the keyboard. So, you know, one example of setting some limit alerts like that. But typically what we like to do is we kind of speed through these things and look for the really, really pristine ones, right? So this little guy has already taken his plunge, it looks like, or his upswing. But once again, depending on what the market does, this might be conducive for a pullback fill.
And when you get a second, it's a good time. Somebody's asking how you delete those horizontal lines. It's not always intuitive, so maybe we'll show them how to quickly do that since you've got one on there just for the sake of answering a question.
You know, that's a good question.
You take the crosshairs off, just highlight it, and delete. You know, you get the, yep, delete.
I don't really delete a whole lot of lines.
The delete key, the delete key.
Oh, well, that's the problem.
Yeah, no right clicking. Just highlight it with your left.
Yep.
You keep clicking somehow. You want to get those crosshairs on the line.
Right.
Now hit the
Okay,
delete.
I'm hitting my delete key.
Huh. Okay.
You know what? We're going to have to look into that because if I'm right here and I hit my delete key, nothing going on.
Yeah, this should be working.
Yeah.
Sorry about that interruption.
Hey, no worries. That's what we call minutia. You know, getting rid of a line. We'll figure that out. But moving right along through this list, you know, a lot of the times when Steve and I deliver 7, 8, 9, 10 alerts, we've probably scanned 3 times that amount, right? So once again,
Yeah.
you know, the smoother the run up, the smoother the little base camp here is. And actually this one, I don't know, Steve, this one doesn't look too bad to me.
No, it doesn't. Let's see here.
You know, 12, 15 or so.
Let's stretch the chart a little bit more vertically. It's really horizontally.
Yeah, there you go.
Stretch it. There you go.
How's that?
That's what we need to see. A little bit more of the peaks and valleys.
Right.
I would say that exactly right there. I think that's kind of a head start on the prior wick going back. Yeah.
So just right at the top of that wick, right there. And of course, you know, when you see these little guys, it kind of gives you a little bit of comfort. But you know, whether it pops and goes or whether it pulls back and fills, you know, I mean, if you're really wanting to get into it, you know, I mean, setting the upper extreme and then setting, you know, doing what we call bracketing can be very effective as well. So we could always say 1117 or even take, you know, the lower half of that candle body and put in another limit alert as well. So it's a pretty simple process, you know. What do we do as traders? Whether it's pre-market and we're doing this stuff for the next day so that we're nice and rational when we see the signal come out, or whether we're hunting and pecking for this pattern on an intraday scale. And see, that's what I'd like to tie together here is because we see the same pattern that we're hunting on the daily, we'll see that be produced in the intraday as well, you know, each and every day like clockwork. And there were so many of these patterns today, it was just like a smorgasbord, you know. It's not that hard. If you can draw a horizontal line, you're halfway there, right?
Yeah.
So, you know, what do? We draw the line. What do? We wait for it to break, and then whoosh, you know. And, you know, this was, I mean, the market didn't really peel off until kind of late in the day, you know. But see, what kind of tipped it, the closer we got to the open, I'm thinking, is this the day where we're going to see the market, you know, kind of give it up at the end? And when you start seeing a lot of stocks do this early in the day, boom, I mean, that means something.
And let me just add to that, you know, the the charts that we've been looking at, these trend change lubricant daily charts that have these bottom bouncing and higher lows and then creating little cup and handles. I mean, we've seen these charts in our sleep. We've been talking about them for a while now. These are not going to work forever. So we as traders have to identify when that stops working, and one of the reasons they could stop working real quick is if today, if that selling that we saw, turns around and continues to, show up this week, next week. I guess what I'm trying to say is, nothing lasts forever. Once you think you got a strategy pegged and you start buying your vacation home, forget it. You're not catching the bigger picture. Markets have inefficiencies, and those inefficiencies will get plugged up, and then something else will start to work. So nothing really ever works forever, and that's why Jamie was even mentioning that last night. Now maybe we need to start thinking about some strategies for selling in the last half hour, because we haven't seen that in a while, and it's probably right around the corner. Don't know when, but my point is all these setups that we're looking at here, they will not work if we wind up in a market where they're selling the rips and the short sellers start to come back in and sell the rips, and we start to create lower highs and lower lows. These types of trend change lubricant setups are not going to work. They're working now because a lot of these have high short floats, and the market's just been on a tear. It's been continuing, and a lot of times in the later stages even of a move, you start to see some of the junk stocks work. The under $5 stocks start to ride. Does that sound familiar? Because that's kind of what we've been in here lately. So, Jamie and I both been around a while, and we know the caution flag needs to be raised a little bit. Don't get too complacent that this particular strategy and the setup that we're working on here is just going to work, from now into eternity, because it won't.
Right, everything in cycles, and we always talk about how there are no guarantees in this business. Well, there is one guarantee. Whatever you're using that is working will stop at some point. That's the only guarantee in the market. So think about this. It's not anytime soon, but eventually we're going to be playing the inverse of these patterns. When the market flips and rolls, we'll be targeting the ones that are in the upper 30%, looking for the exact same pattern, but to the downside.
Yeah, and we'll see. I mean, somebody's asking me about that right now. That hasn't really tested very well and not worked very well, but that's not to say it won't come into play and start working well. Basically, all you'd have to do is take that trend change lubricant and hit the flip button, and everything becomes reversed. But right now, in this type of market environment, that's not working very well. I'm curious to see if there will be a day when it will be that easy, but theoretically, it should be when that day comes.
This is true. This is true. So, what's the takeaway here? Preconceived notions are a very bad thing. Try to dispense with them on a daily basis, and engage in the Holy Trinity, that is limit alert windows, Holly, and our top list and alert windows. The top list and alert windows, that's the information source, the well, if you will. That's where we get the water or the oil, and then we refine it by placing it into our limit alert price windows so that we can act on that action. And then we have Holly being our Sherpa through the market, stepping on the landmines to decrease our risk and pointing us to good trades. So you see, it's a really simple process. Everybody tries to complicate things, and Lord knows, in this industry, it's just information overload. But, I hate to sound like a broken record, but I like to try to learn from the great minds of our time, And when you hear people like Einstein talking about simplicity and how if you don't understand something well enough to explain it simply, then you yourself don't understand it. And then Leonardo da Vinci saying simplicity is the ultimate sophistication. I mean, really? That means something, I'm not just pulling these things out of the air. These are, these are things that just resonate, and they make a lot of sense. Keep it simple. Keep it simple, obey your rules, and you will scratch profits out of the market. So, I think, Steve, unless you have anything else to interject, now it's time for a little bit of comic relief.
Yeah. Yeah, okay. Again, going back to the analogy of sitting next to a great...
Okay. First we have to laugh at this guy one more time. Everybody get it out.
Okay, put your fingertips together, Mr. Wonderful. You were wrong. You were so wrong and publicly.
Okay, and now let's take a look at the person that you want to be and the person that you do not want to be. Okay. Over here we have Zach counting cards in the casino, right? This is the guy that you want to be right here. You don't want to be this guy right here.
No. No, he's
No.
fun to party with, but he's not going to lead you to the promised land like everybody was
Exactly.
around Zach Galifianakis trying to see what he was doing so smart there in that movie Counting Cards. So just a little reference to, the idea behind what Holly actually is, a statistical machine that does not have emotions, that in the long run is going to wind up delivering better results than the average guesser and opinion taker.
And ladies and gentlemen, that was it. I guess it's time to bring Mr. Scott in.
Yep.
Talk
Let's do
about how things are going to change coming up here, and how you guys that do not have the AI yet can lock in that lifetime license. So Scott, we're ready over here to hear your wisdom.
Oh, hey there. You didn't have my slide up.
Well, we were all just kind of fixating on our slide here. We got hypnotized.
Yeah, so we're a software as a service company. Our core is the $99 per month subscription rate. That includes all your real-time data and exchange fees, the charting, also a really great one-on-one training session with Jamie or Steve. As soon as you sign up, go ahead and go to support, click on training, pick your date and time. Of course, the yearly $888 saves you a lot over the monthly rate, and that has all the same great stuff. Now, something really important is the AI strategy channel license fee. It's a one-time $1,100 purchase. You get it. It's yours for life. It includes the odds maker, how to optimize all your strategies, and Holly, so you get trades that are performing right now in the market. And that's lifetime. That's all I need to go along with that is the subscription. So what we do to thank everyone that is attending is provide a handout in your handouts panel of your GoToWebinar presentation. It's got some of the same info I'm going to talk about right now. And the code this week is Holly27. Holly is all caps, and you need to enter it just like you see it on the screen, but that takes half off your first month. There's no contract. There's really no excuse not to give us a try. It's under 50 bucks. Go ahead and do that, sign up for the training, get a head start, and then upgrade to get the AI and Holly. And if you are going to do that today or before the end of business on Friday, use the same code, and it takes 30% off of that. Just get it for just $770 lifetime instead of $1,100, or that code also takes 20% off your first year, so that's down from $888 to $710, and you're grandfathered in at $888 a year. And you can also go to we got a bit.ly link up for you, and it's bit.ly/AI Holly, and the AI Holly is all caps too. You can click through that on your PDF that you just downloaded, or type it into your browser as you see it on the screen. That code, after you click through for the 1988 combo, will drop that down to $1,480, and that saves you $500, over $500 right away, and then renews at $888 the next year. But the AI license is yours for life. Now, something that's Steve talked about earlier, this is going to go away probably by the end of May, early June, depending on when we do some changes to the way our permissions are set up programmatically in the back office, and we're going to do away with the lifetime license. So essentially, it's going to cost almost as much as that 1988 without the discount every year just to have the full AI and subscription for the annual. So if you really want to get in and save a bunch and renew at $888 and have AI forever, this is going to be the month to do that. There's no real reason to wait for it. Thanks everyone for joining us. There'll be a recording up in a couple hours. Anything else for these guys? If you have any questions, email us at info@trade-ideas.com is the best way to get answers for stuff. Thanks, Jamie. Thanks, Steve. Have a great weekend, and I hope everyone else enjoys it too.
All right.